So we keep hearing that mutual funds are subject to market risk, but honestly speaking, mutual funds are not only subject to market risk, they are subject to liquidity risk, they are subject to economic risk, geopolitical risk, currency risk, even credit risk. What that basically states is that mutual funds are also pooled investments from multiple investors. Now, if we are 10 people sitting in a room, 10 of us have decided to invest in one particular mutual fund scheme, and then that scheme is in turn investing in another asset, be it equity, be it debt, be it gold, be it silver, it could be anything. But eventually, then that pooled asset has a fund manager who will be managing that asset. Now, despite that, fund manager having varied experience, having a very good profile, also knowing how markets are going to pan out, eventually there are factors which are beyond his control or her control, and it's also beyond our control, probably beyond the government's control also. It can be something like a geopolitical risk that has recently happened in a country like Pakistan, where the stock markets have gone down probably because of a terror risk that has come in place. Had no correlation with equity markets, had no correlation with credit markets, but it was a geopolitical risk which is impacting the entire market. In the same way, if you look at any other asset, it is subject to a credit risk or a liquidity risk or a currency risk, and that impacts returns drastically as well. That's why we tend to say that you should always stay invested for the longer term, because all these risks get nullified if you look at it from a 10-year, 12-year horizon. But if I'm looking at it from a 6-month, 1-year horizon, then probably it will lead to negative returns as well. So one clear thing that we should do is probably make sure that we define the time horizon that we want to invest in, and the goal should match the time horizon. Secondly, is that we should also make sure that the risk tolerance of an asset should be compared to the risk taking capability of the individual as well. So if I am 30 years old, I have the capability to invest for the next 10 to 15 years in a high risk investment asset bucket of equity mutual funds, and the risk tolerance is of a Kotak Select Focus, which is also an asset that is telling me to stay invested for 10 to 15 years. It matches and I should invest.